James Altucher, 10 Major Predictions for Cryptocurrencies and the Future of Money. The mainstream media basically brainwashed most Americans into thinking Bitcoin was a scam. Don't expect the mainstream media to show you how to make a fortune from new tech trends, including digital currencies. They're always late to the party. In 1994, for example, the morning show NBC's Today had a segment where one of the anchors asked, "What is the internet, anyway?" In June 1998, mainstream economist Paul Krugman predicted the internet's impact on the economy would be no greater than the fax machine. I can go on and on. But while the establishment was dismissing the technology as a fad, early adopters like myself were heavily investing in it and making fortunes. The same thing is happening with cryptocurrencies. Capitalism is 100% about innovation. The famous invisible hand has been written about since the 1700s. It guides capitalism through all the ups and downs of the economy, through depressions, recessions, wars, and so on. Innovation might slow down for a few years here and there, but nothing stops it. Nothing stopped the internet from happening. Recessions didn't stop it. The Depression, if you count 2008 and 2009, didn't stop it. The housing bust, 2 wars, and many military interactions didn't stop it. Even though markets fluctuated enormously, nothing could stop these $2 trillion mega trends of the internet and mobile. We live in a world where all the large institutional structures that supposedly supplied safety to the individual are slowly disintegrating. No longer can we rely on the old paradigms, school, corporations, government, etc., to provide the safety and success we deserve. So the way to deal with scary markets is to trust capitalism. It has been a success for hundreds of years, even if individual governments or entire stock markets haven't always been. So if you want to avoid riding over the cliff in the bad economy, you must go into innovation economy. And cryptocurrencies are a major part of the innovation economy. I've been actively involved in investing in cryptocurrencies since 2013. I sold my book, Choose Yourself, in a Bitcoin-only store I created a month before I released it on Amazon. So I'm no newcomer to the crypto craze. I'll admit. At first I thought Bitcoin was a fad, because I kept seeing day traders gamble and lose money on it. Day traders should not be day trading Bitcoins. But after extensive conversations with a friend of mine, Naval Ravikant, the founder of Evangelist, he convinced me that Bitcoin is, in fact, a game changer. Why? It is not dependent on any one institution or person to bless its success. And it solves many problems today's dominant institutions can't solve, or don't want to solve. My friend convinced me, along with my own subsequent research, that Bitcoin has many features that make it attractive not only as a potential future currency, but as a replacement for all contract law, for example. The cryptocurrency Ethereum, and its native token, Ether, are better suited to provide a cheap and easy way to escrow funds in the form of the platform's more sophisticated self-executing smart contracts in one swoop. Any economy that takes up Bitcoin as a currency will rewrite all contract law, eliminating the need for lawyers in 99% of situations. Think we have too many lawyers in this country? Well, cryptocurrencies will allow contracts without lawyers. Bitcoin could also take the role of international payments from banks. While technology may be shrinking the economic world, the current payment systems provided by banks are still stuck in the 20th century. Today, every international payment must pass through a network of local banks, central banks and international wire services, taking 7 or 8 hops to get to their destination, and with every hop involving fees, potential errors, threats to privacy and other security risks. Cryptocurrencies will eliminate the need for exchanges, and make international trade infinitely simpler. They solve the multiple problems inherent in finance and commerce today, including the fees and time it takes to send international payments. They are not dependent on any one person, for instance, a Federal Reserve chairman. They are not dependent on a government, for instance, a government that relies on a fiat currency. They are not dependent on "in God we trust," a phrase that was first put on coins in 1862 to instill more faith in a currency that was potentially in trouble due to war. They are not dependent on complicated central bank operations to have the money transfer from one wallet to another. Every wire or transfer, or even credit card transaction from one human to another in US currency involves the central bank at some level, unless it is in small amounts like a cash transaction. For example, imagine I want to send Joe dollars to buy his house. I need to trust all of the middlemen between Joe and me, local bank, central bank, lawyers, governments, Joe's bank, etc. to approve of this transaction if I do it in dollars. This is okay, but at each step someone can be untrustworthy. They are all humans, even the government. Humans subtly influence the price of the dollar and also share details of the transaction with unfriendly parties like the IRS. Also, each step in the above has a transaction cost. So inflation is built into the system. If this were a Bitcoin transaction, enough miners, technical folks who facilitate the transaction, need to approve that this transaction is valid. So even if a few miners are not trustworthy, the bulk of them will be, and we can trust that the transaction between me and Joe is legit. Suffice to say, it works on Bitcoin and any other legit cryptocurrency. Basically, this is the main problem cryptocurrency solves. It avoids governments, borders, middlemen, extra transaction costs. It also has high security and avoids problems like forgery. Cryptocurrencies, probably in many forms, will be in our future. And they will dominate the money supply at some point. And how we get from here to there will be paved with many lucrative opportunities. Let's review why cryptos are so revolutionary and solve many of the problems our current institutions present. They are encrypted, making all transactions secure and private. A feature our banking system does not have. They are peer-to-peer. Meaning, no bank or credit card company, or both, is involved in the middle of a complicated transaction. No wire needs to be done. They are decentralized. Meaning, a single bank, the Federal Reserve, cannot control all transactions. Remember Napster? It was centralized and now gone. A cryptographic record of every transaction is kept in every Bitcoin wallet. Transactions occur as the network approves them, eliminating the need for banks, checks, and all the massive overhead of processing transactions in a fiat currency. Such overhead ultimately leads to inflation and mindless draining on the system that will no longer occur with Bitcoin and other legitimate cryptocurrencies. Yes, there are a lot of crypto frauds out there right now. It's like the Wild West. And many investors in them will lose everything investing in the scams. But with my experience as a hedge fund manager and computer programmer, I know how to separate the legitimate cryptos from the frauds. And I want to help the many people who are being scammed by all sorts of schemes that are luring people into buying or trading cryptocurrencies that can be potentially worse than giant Madoff schemes. The scams are out there. But so are legitimate cryptos. And fortunes will be made in these legitimate cryptos. Cryptos, the future of money. I'm not exaggerating when I say cryptocurrencies are the biggest innovation since the internet. We're on the ground floor of an enormous trend that's going to change the world. Cryptocurrencies solve trillions of dollars worth of problems, which is why they will be worth trillions of dollars one day. Consider the potential. There is currently $200 trillion in cash, money and precious metals used as currencies in the world. Meanwhile, there's only $200 billion in cryptocurrencies. Cryptocurrencies are eventually replacing traditional currencies. So that $200 billion will eventually rise to the level of currencies. And probably sooner than we can imagine. Fortunes have been made in cryptocurrencies, and many more will be made in the future. But just like the internet boom in the 90s, there will be a lot of scams. Let me say it right now, 95% of cryptocurrencies are scams. But with the total number of cryptocurrencies now exceeding 1,000, that means at least 50 legitimate cryptos out there right now. 50 is a lot more than 1 or 2 or 3. My job is to research, study, and use my connections to avoid the scams. I'm dedicated to finding the tiny portion of cryptocurrencies, that remaining 5% that will turn that $200 billion into $200 trillion. I hate to use big numbers like that. But those numbers are facts. If, and only if you avoid the scams, you'll find the cryptocurrencies that actually solve major problems of prior currencies. Also, avoiding the scams lets you follow closely the people who are doing the research and have the credibility in this space. Yes, cryptocurrencies are in a major bubble. But don't let that word scare you away. Crypto opportunities are never going away, and generational wealth will be made. I'm telling you, the opportunity here is immense. Think, Internet in 1994. A lot of people got very rich before that bubble burst. One day soon, BC will stand for before crypto, and AC will stand for after crypto. Right now we're living in early years of AC. It's time to get ready. The world is about to change because cryptos are the natural evolution of money. First it was the land you owned and the resources you developed on that land, wheat, grains, etc. Then it was metals, gold, silver, etc. You traveled with it by fashioning it into jewelry. But too much gold makes it harder to transport. Then came paper currency. Backed first by gold, it's now backed by faith in God we trust, or government. Electronic currency followed paper. It's easily transportable. But transaction fees are all over the system. And it offers zero privacy. Now we have cryptocurrencies. They're easily transportable, have zero transaction fees, there's no human intervention between payer and payee, and it offers anonymity. Money evolves like anything else, and the natural evolution of money is always as a store of value that is easier to move, more secure and more private. How can you transact across a large geographic area with fewer fees, fewer costs, less chance for human error, higher security and privacy? Cryptocurrencies. They're the natural evolution of money. The evolution of money and the evolution of every industry strongly imply that cryptocurrencies will be in our future. Now, it's true that uncertainty breeds volatility. Cryptocurrencies are going to be volatile for a while. But why does volatility create opportunity? Because it's rare that intrinsic value changes much day to day. If you can identify the cryptocurrencies that are legitimate, have strong intrinsic value, then you can make a lot of money playing off the volatile situation in crypto. And that's where I come in. I want to help the many people who have been scammed by all sorts of schemes duping people into buying or trading bad crypto. My solution is simple. Research, diversification, and building a network of intelligence allows me to help you understand all the relevant issues and make smart decisions. I'm here to sift through the duds and bad info to give you real money-making opportunities before, while and after the bubble bursts. On that note, I'm pleased to introduce Kamil Ravikant. Kamil and I have invested in many projects together successfully. We've worked together on companies, books, investments, and between the two of us I have confidence there is no better network of contacts and expertise that can be brought to the table. We are both investors, coders, entrepreneurs, writers, and effective networkers in the technology and crypto sector. Here are 4 principles Kamil uses to approach cryptocurrency investments. In both of our experiences, these are the best ways to get high multiples on capital. Kamil, 1. Always have an unfair advantage. Otherwise, you're the sucker. This is why I never even play a 5-cent slot machine in Las Vegas. The house has the unfair advantage, not me. So, in cryptocurrency, my unfair advantage is my network of insiders, my ability to talk with founders, having been one, being pitched by and invested in many, and separate fact from fiction, my experience, and often, to use my connections to find out about the best ones and invest in them early before the average investor knows they even exist. 2. Value invest. I'm a big fan of Benjamin Graham and Warren Buffett. They find assets of value, buy them below market price and then hold. With cryptocurrency, the ones that survive in the long term will be worth such stupid levels of money, it will make today look cheap. We'll have those in our portfolio. 3. Biggest markets. An asset that wins 10% of a small market doesn't interest me. All these investments are high risk, so I only focus on the ones with the highest reward potential. An asset that wins just 1% of a multi-trillion-dollar market, well, sign me up. 4. Discipline. This is my best quality as an investor. Never sell or buy on emotion. That's for amateurs and keeps Wall Street in business. I'm in this for the long term, and without discipline, you cannot survive investing, especially in a new asset class like cryptocurrencies, where every single day is a roller coaster ride. We believe these are the keys to approaching cryptocurrencies. There's no avoiding reality. The evolution of money and the evolution of every industry strongly imply that cryptocurrencies will be in our future. How we get from here to there will be paved with many lucrative opportunities. To learn more about these and how you can make a fortune in this space, I'm here to sift through the duds and bad info to provide real money-making opportunities before, while and after the bubble bursts. Many were burned with similar bubbles like the dot-com boom type in the single quote 90s. My goal is to make sure people don't get burned again. Crypto alert, mastering the volatility. Investment booms. It was the most expensive pizza ever bought in the history of human existence. In May 2010, an unknown programmer named Laszlo Hanich exchanged 10,000 bitcoins for 2 Papa John's pizzas. About $30 could have netted you the 10,000 bitcoins Laszlo needed to fork over for his 2 pies, according to Coinbase. It was the first real-world Bitcoin transaction. But that's not the only reason it made history. Fast forward to today and we find ourselves smack in the middle of a Bitcoin buying frenzy. Everyone will remember 2017 as Bitcoin's breakout year. In January, Bitcoin was trading near $1,000. It crossed above $3,000 in June. Then it hit $5,000 in September. On December 7th, the great Bitcoin rally screamed to a staggering $19,000 before falling back to $15,000 in a matter of hours. Bitcoin has proven it can turn just a few bucks into a fortune. But the dips and rips are more volatile than in any other market in history. But with my 7-figure formula, you could master it. Time to seize the day. The simplest way to profit from the Bitcoin boom. So what's the best way to play the Bitcoin boom? The best way is simply to buy Bitcoin itself. Thanks to recent developments, that's actually a lot easier than it used to be. It also requires a whole lot less capital than you may think. You don't need to invest tens of thousands of dollars to get exposure to Bitcoin. A couple $100 is enough to get you started. The advantages of buying Bitcoin come from the fact that it's the only cryptocurrency that you can buy and forget about right now. When the day of reckoning comes for the crypto bubble, Bitcoin is likely to be the only coin left standing. Another benefit to Bitcoin is that you can buy as little as 0.000000001 Bitcoins, making the tiniest unit of Bitcoin tradable to date worth less than a penny. You can get exposure without sinking a massive chunk of cash into it. Just remember, the major upside doesn't come without some risks. The smartest way to play this crypto king is by making a modest bet and then not fixating on the roller coaster ride to follow. Will crypto boom stocks quickly go bust? The boom in cryptocurrencies is following the same script that has played out over and over again. You see, every boom follows a sequence of 3 stages. Every single boom throughout history has followed this script. The stock market boom in the roaring single quote 20s. The tech boom in the 1990s. The housing boom in the 2000s. And now the booming cryptocurrency market is following this exact same 3-step script. First, only early enthusiasts are courageous enough to invest in the new trend. That's stage 1. Then, institutional investors, the so-called smart money, jump in. That's stage 2. Finally, the public joins the party, triggering a massive explosion in price. That's stage 3. If you know how to use this roadmap, you could make an absolute fortune. And to help you understand how this 1-2-3 sequence works, let me show you what happened during the 1990s boom in tech stocks. In the mid-1990 seconds, most people didn't even know what the internet was. In 1994, the morning show NBC's Today had a segment where one of the anchors asked, "What is the internet, anyway?" While most people were dismissing the technology as a fad, early adopters like myself were heavily investing in it. In 1995, I correctly predicted every company would need a website. So I started my first internet company to help big corporations get online. That's how I ended up building the first websites for American Express, HBO, Sony and Disney, among others. That was stage one of the boom. Only when Netscape went public in late 1995 did people outside Silicon Valley start taking the internet seriously. That's when institutional investors started joining the party, with pension funds and venture capitalists making a fortune when companies like Yahoo and Amazon went public. The additional flow of money from the smart money helped push tech stocks even higher. That was stage two of the boom. But the public was still not participating. In June 1998, for example, mainstream economist Paul Krugman predicted the internet's impact on the economy would be no greater than the fax machine. It wasn't until 1999 that the masses finally started to invest heavily in tech stocks. With more people jumping into the market, tech stocks jumped even higher, attracting more and more people wanting to get a piece of the action. And that was the third and most explosive stage of the boom, with the Nasdaq soaring more than 85% in 1999 alone. I'm telling you this because my research shows that cryptocurrencies are following this exact same script. First, early enthusiasts, then, institutional investors, and finally the public. Where are cryptocurrencies right now? In stage two of the boom. The public is still not invested. That's why right now is so special. If you get in before the masses, you could see astronomical gains. And to help my readers take advantage of this generational opportunity, I've organized a very special team. Using my network, I've located a small group of experts and hired them to also take a look inside the computer code and locate the cryptos we actually stand to profit from, including my chief crypto analyst in this service, Kamil Ravikant. Kamil is an entrepreneur and partner at Evolve VC, one of the most successful venture capital funds in Silicon Valley, where he manages millions of dollars and often teams up with other funds managing hundreds of millions of dollars on various deals. Kamil is one of the top investors in cryptocurrencies. You won't find anyone smarter or more connected than him. I got him to agree to work exclusively for my service, Altucher's Crypto Trader. And even more so, between my and Kamil's networks, we have access to the top investors and activists investing in cryptos. We can open up our network to readers, plugging them in and letting them profit. And more importantly, we can show readers exactly how to set up trades that are safe and secure and also position them for both short-term and long-term success. Like I've said, cryptocurrencies are here to stay. Are you still intimidated or unsure about cryptocurrencies? Well, if you don't have experience with digital currencies, you are not alone. Despite the massive investments from the smart money, despite all the newly minted millionaires, and despite this exploding market, most people don't even know what a cryptocurrency is. To this date, fewer than 1 in 10,000 people have invested in Bitcoin. Just ask your friends, spouse and neighbors what they think of Ethereum, Litecoin and Monero. I bet they'll have no clue what you're talking about. That's because the masses are not participating in this boom. Not yet. Remember, the biggest gains in any bull market throughout history only happen when the public joins the trend. It's the masses that will push cryptocurrencies to the moon. There are more than 1,300 cryptocurrencies out there right now. And new ones are coming out all the time. Imagine trying to trade all of them. That'd be like having 1,300 stocks in your brokerage account. It boggles the mind. So even for those among us who do know a little bit about cryptocurrencies, they still may feel lost in the shuffle. I estimate 95% of cryptos will go bust at some point. That's why I created Crypto Trader, to offer radical simplicity and the chance to actually make money by harnessing the power of the cryptos that will survive. We will be using a proprietary allocation model to safely diversify and position ourselves to collect massive gains with all 4 currencies in the portfolio. Pairing this model with arbitrage opportunities is the key to success. Bitcoin and other digital currencies aren't the only assets benefiting from cryptomania. There are many ways investors can speculate on cryptocurrencies without buying a single coin. With Bitcoin mania ramping up to all-time highs, some of the smallest stocks operating in various spaces related to cryptocurrencies are starting to go wild too. These plays are taking Wall Street by storm. 3 of the 4 most actively traded stocks in the country the Monday after Thanksgiving were crypto plays, Reuters reports. However, not all of them were rocketing higher. Many of these stocks have endured incredible intraday price swings of triple digits in a matter of days. That's enough to give even the most adventurous investor heartburn. Moves like the ones we're witnessing in these emerging crypto plays are rare and incredibly exciting for investors. But as with any mania, we need to be on the lookout for imitations and scams. We'll probably witness countless new blockchain and cryptocurrency companies appear on the public markets over the next several months. Not all of them will be great investments. Many will probably turn out to be complete duds. Of course, we don't want to just jump on some random Johnny-come-lately crypto play that will temporarily explode higher only to fizzle out within a few weeks. Instead, we need to track down the plays that have the potential to deliver explosive profits and sustain them as the Bitcoin and blockchain story continues to grow. My friend convinced me, along with my own subsequent research, that Bitcoin has many features that make it attractive not only as a potential future currency, but as a replacement for all contract law. For example, the cryptocurrency Ethereum, and its native token, Ether, are better suited to provide a cheap and easy way to escrow funds in the form of the platform's more sophisticated self-executing smart contracts in one swoop. Any economy that takes up Bitcoin as a currency will rewrite all contract law, eliminating the need for lawyers in 99% of situations. Think we have too many lawyers in this country? Well, cryptocurrencies will allow contracts without lawyers. Bitcoin could also take the role of international payments from banks. While technology may be shrinking the economic world, the current payment systems provided by banks are still stuck in the 20th century. Today, every international payment must pass through a network of local banks, central banks and international wire services, taking 7 or 8 hops to get to their destination, and with every hop involving fees, potential errors, threats to privacy and other security risks. Cryptocurrencies will eliminate the need for exchanges, and make international trade infinitely simpler. They solve the multiple problems inherent in finance and commerce today, including the fees and time it takes to send international payments. They are not dependent on any one person, for instance, a Federal Reserve chairman. They are not dependent on a government, for instance, a government that relies on a fiat currency. James Altucher, 10 Major Predictions for Cryptocurrencies and the Future of Money. The mainstream media basically brainwashed most Americans into thinking Bitcoin was a scam. Don't expect the mainstream media to show you how to make a fortune from new tech trends, including digital currencies. They're always late to the party. In 1994, for example, the morning show NBC's Today had a segment where one of the anchors asked, "What is the internet, anyway?" In June 1998, mainstream economist Paul Krugman predicted the Internet's impact on the economy would be no greater than the fax machine. I can go on and on. But while the establishment was dismissing the technology as a fad, early adopters like myself were heavily investing in it and making fortunes. The same thing is happening with cryptocurrencies. Capitalism is 100% about innovation. The famous invisible hand has been written about since the 1700s. It guides capitalism through all the ups and downs of the economy, through depressions, recessions, wars, and so on. Innovation might slow down for a few years here and there, but nothing stops it. Nothing stopped the internet from happening. Recessions didn't stop it. The Depression, if you count 2008 and 2009, didn't stop it. The housing bust, 2 wars, and many military interactions didn't stop it. Even though markets fluctuated enormously, nothing could stop these $2 trillion mega trends of the internet and mobile. We live in a world where all the large institutional structures that supposedly supplied safety to the individual are slowly disintegrating. No longer can we rely on the old paradigms: school, corporations, government, etc., to provide the safety and success we deserve. So the way to deal with scary markets is to trust capitalism. It has been a success for hundreds of years, even if individual governments or entire stock markets haven't always been. So if you want to avoid riding over the cliff in the bad economy, you must go into innovation economy. And cryptocurrencies are a major part of the innovation economy. I've been actively involved in investing in cryptocurrencies since 2013. I sold my book, Choose Yourself, in a Bitcoin-only store I created a month before I released it on Amazon. So I'm no newcomer to the crypto craze. I'll admit. At first I thought Bitcoin was a fad, because I kept seeing day traders gamble and lose money on it. Day traders should not be day trading Bitcoins. But after extensive conversations with a friend of mine, Naval Ravikant, the founder of Evangelist, he convinced me that Bitcoin is, in fact, a game changer. Why? It is not dependent on any one institution or person to bless its success. And it solves many problems today's dominant institutions can't solve, or don't want to solve. They are not dependent on "in God we trust," a phrase that was first put on coins in 1862 to instill more faith in a currency that was potentially in trouble due to war. They are not dependent on complicated central bank operations to have the money transfer from one wallet to another. Every wire or transfer, or even credit card transaction, from one human to another in U.S. currency involves the central bank at some level, unless it is in small amounts like a cash transaction. For example, imagine I want to send Joe dollars to buy his house. I need to trust all of the middlemen between Joe and me, local bank, central bank, lawyers, governments, Joe's bank, etc. to approve of this transaction if I do it in dollars. This is okay, but at each step someone can be untrustworthy. They are all humans, even the government. Humans subtly influence the price of the dollar and also share details of the transaction with unfriendly parties like the IRS. Also, each step in the above has a transaction cost. So inflation is built into the system. If this were a Bitcoin transaction, enough miners, technical folks who facilitate the transaction, need to approve that this transaction is valid. So even if a few miners are not trustworthy, the bulk of them will be, and we can trust that the transaction between me and Joe is legit. Suffice to say, it works on Bitcoin and any other legit cryptocurrency. Basically, this is the main problem cryptocurrency solves. It avoids governments, borders, middlemen, extra transaction costs. It also has high security and avoids problems like forgery. Cryptocurrencies, probably in many forms, will be in our future. And they will dominate the money supply at some point. And how we get from here to there will be paved with many lucrative opportunities. Let's review why cryptos are so revolutionary and solve many of the problems our current institutions present. They are encrypted, making all transactions secure and private. A feature our banking system does not have. They are peer-to-peer. Meaning, no bank or credit card company, or both, is involved in the middle of a complicated transaction. No wire needs to be done. They are decentralized. Meaning, a single bank, the Federal Reserve, cannot control all transactions. Remember Napster? It was centralized and now gone. A cryptographic record of every transaction is kept in every Bitcoin wallet. Transactions occur as the network approves them, eliminating the need for banks, checks, and all the massive overhead of processing transactions in a fiat currency. Such overhead ultimately leads to inflation and mindless draining on the system that will no longer occur with Bitcoin and other legitimate cryptocurrencies. Yes, there are a lot of crypto frauds out there right now. It's like the Wild West. And many investors in them will lose everything investing in the scams. But with my experience as a hedge fund manager and computer programmer, I know how to separate